Namaskar, welcome to Vital. Here we will explore how silver officially enters into India's formal credit system. The Reserve Bank of India is allowing regulated loans not as sentiment, not as tradition, but as financial asset, access to millions of Indians.
In the landscape of Indian households, silver has often been an overlooked asset, quietly tucked away in cupboards, yet holding immense latent value. With the upcoming announcement from the Reserve Bank of India (RBI) set to be implemented on April 1st, 2026, this will no longer be the case. For generations, silver has been a trusted store of value. A pair of anklets, gleaming utensils, or inherited coins often lies untouched, despite the pressing need for funds. This regulatory shift signals a significant turning point. Now, silver can transform into accessible credit. The impending rule change is monumental. It allows banks and non-banking financial companies, NBFCs, to extend loans against silver alongside existing gold loan services. Silver jewelry and coins can now serve as collateral, a game-changing development that will standardize valuation rules and ensure borrowers are comprehensively protected within this framework. The ripple effects of this initiative will impact millions of households, unlocking avenues for many who previously felt the weight of their silver debts confined in vaults and cupboards. The impetus behind RBI's decision to introduce this policy is clear. India boasts a vast reservoir of household wealth in silver, much of which has remained financially invisible. Surprisingly, many families possess more silver than gold, but hesitate to leverage their gold for loans due to emotional or traditional ties. Furthermore, in rural regions where silver is commonly held, the need for lucrative credit options has become paramount. By allowing loans against silver, the RBI is strategically unbinding these idle assets, enhancing access to formal credit while reducing reliance on predatory moneylenders who often thrive in financial exclusion. Understanding how a loan against silver operates reveals the simplicity and practicality of this transformation. Individuals can bring their silver jewelry or coins to banks or NBFCs where the silver is appraised. Based on its assessed value, borrowers can receive a percentage as a loan, which they can repay with interest. Once debts are settled, the silver is returned to its owner, unabated in value. This system allows families to convert their dormant assets into working capital without forfeiting ownership, an empowering shift in personal finance philosophy. The principal beneficiaries of this policy will be diverse, particularly rural households, self-help groups, women who often retain silver jewelry, farmers requiring short-term funding, and small traders struggling without formal credit histories. For many families, silver represents their most accessible form of collateral. The RBI's new initiative heralds an era of financial inclusiveness, allowing the wealth stored in silver to fuel dreams, instigate growth, and uplift lives in Indian households. The Reserve Bank of India (RBI) has made a significant decision to delay its silver initiative until April 2026, a reflection of the unique challenges silver presents compared to gold. Silver's lower value density and greater bulk pose inherent difficulties, not to mention the variations in purity that complicate valuation. Price volatility is another aspect that cannot be ignored. The RBI recognizes that it needs time to develop precise valuation standards, establish loan-to-value limits, and formulate safe storage and safety norms. This cautious, well-planned rollout is a decision rooted in the need for stability and regulation, ensuring that the system is ready to handle this transition smoothly. To clarify, this initiative does not signify the launch of a silver-backed currency in India. It is essential to dismantle the prevalent myths surrounding this transition. The rupee will not be tied to silver or gold, nor is the RBI mirroring the actions of countries like China or Russia. Instead, the objective here is to enhance credit access. Loans against silver serve as a means to provide credit rather than equate the currency with the metal. Understanding this distinction is crucial as they pertain to entirely different financial systems and functionalities. In the long run, this pioneering move by the RBI is positioned to reshape the financial landscape in India profoundly. It aims to integrate more individuals into the formal banking system, widening access to credit down to the grassroots level. This expansion will be instrumental in reducing reliance on informal debt, which often traps vulnerable borrowers in cycles of unmanageable repayment. As trust in formal banking practices strengthens, silver will transition from its traditional role as a decorative asset to one of productivity and financial empowerment. Looking at the bigger picture, silver's silent role will transform dramatically starting April 2026. It will no longer be just a metal linked to jewelry or sentimental value. Rather, it will become a tool of opportunity and dignity for borrowing. This initiative represents a shift from invisible wealth to visible potential, allowing millions of Indians to leverage their silver assets with confidence. It's about embracing what silver can offer beyond its historical associations, ultimately benefiting individuals and the economy as a whole.